All right, good morning. Let's go over today's trade plan. So in the overnight session, for the most part, the market's balanced in a range, but they did so on above average volume. Over the last couple of sessions, we've seen that the volume has been really light and the ranges have been muted, and it's just been a very choppy environment. Finally, now we're seeing some above average volume, and that can lead to some better opportunities, some better reactions off the zones, as well as a wider range on the day time frame. Now, if we look at the Russell, TF has been pretty much trending lower for the last two sessions, and at this point is hovering around the 1095 to 1096 HVN. So some very clear weakness in TF, but at the same time, the main catalyst on the day time frame is the Philly Fed survey at 9 a.m. Central, and because of that, the first 30 minutes could be somewhat balanced. And when you think about that and look at how oversold TF is, there's a pretty good chance that responsive buyers are going to be active in that market on any further pushes lower into support, and we can just balance for first 30 minutes. So, looking at ES, we have pre-market support 79.75 to 81.75, and that's a pretty key area for buyers short term because that's essentially the low from Monday's breakout, looking at the RTH session. And, if the buyers are going to maintain control, then that's an area where we could get some activity. Now, if we break below that zone, which, right now we're just kind of balancing and hovering there. NQ, by the way, has been holding up really well so far. Considering how weak TF is, it's been holding up extremely well. So right now the bias is very neutral. We know that short term there's some weakness in this market. Bigger picture, buyers can still enter. TF is oversold, so even though it's been very weak, there may be limited downside now, at least off the open. So overall, I think that we're going to get some buying activity here off the open, and then once the Philly Fed survey is out, then we can get some directional movement, some continued high volume, and figure out where this market's going. But in the event of a break below 79.75, we could get a push down to the 74 to 76 initial support zone, and the 73.5 gap. And then finally, the main HVN from the balance that we broke out from is 70.5. So those areas below initial support, the open gap, and HVN can still attract responsive buyers on first test. And because we're seeing above average volume, the reactions could still be decent. Even if it's not going to end up being low of day, which, those zones below do have potential to be low of day. If we're not in like a trend down or liquidation type market, we could get a move lower into initial support or the 70.5 HVN, and then we just reverse for the remainder of the session. But even if that's not going to happen, right? Even if we're just going to kind of bounce and then go lower, the reactions at those support areas below can still be pretty decent because of the above average volume. So we can still get, 4 to 6 point bounces off those zones. On the upside, we have the gap at 85.25. It's pretty close by, so it seems like the market will most likely fill the gap off the open. Or even if we head a little bit lower, there's still potential that we can get a pop and the market can fill the gap. Above it, the main upside target and the initial resistance zone is 88.5 to 90.5, and that is really the key inflection point for buyers in this market. So if we're going to get, if we're going to hold this breakout and actually get a continuation, then the inflection point to figure that out is 88.5 to 90.5. If we can go through that on the upside today, then this breakout can still remain intact and we can continue higher. The next objective would be 94 to 96. We have an open gap and naked VPOC there. So on the upside, those two zones are really the main targets, with the high probability target being 88.5 to 90.5, and that's the main inflection point. If we get a failure there, then we have to be careful on buying pullbacks because we could get a deeper pullback at that point. Looking at NQ, yesterday we got a bounce off of an important HVN at 35.84. In the event that we break below that, the next spot would be the breakout area around 35.67 to 35.72 in NQ. And in TF at this point, holding below the 1095, 1096 HVN. The next spots are the 1093 VPOC that we started when we broke out on the upside. So that's from May 9th. And then we just have the recent lows in TF around 1087 to 1088. So that's how all the markets are shaping up right now. TF is clearly the weakest market right now. It has been pretty much dragging the others lower. And, it's the only market that didn't actually break out from its balance. It actually found sellers at the top of its range. And now it's pretty much given up all those gains and is very close to the bottom of that range. Bottom of its recent short-term balance. So, this is a red flag. It is a cause for concern. But at the same time, if TF hits a support spot here and the other markets are holding up well, then it could still get buyers across the board, right? We can still get buyers in TF and then also get buyers in the S&P and NQ because those markets have been relatively strong and holding up pretty well. So off the open, the overall bias short term, it's a bit weak. Bigger picture, it's still okay. So the net is that, we're neutral heading into the open, given that we're opening below value and the major catalyst is at 9 a.m. Central. I still think that even if we get a little push lower, it's going to attract responsive buyers and we can get some buying activity in the first 30 minutes. And then once the Philly Fed survey is out, then we can get some directional movement and figure out where this market's going to go. 70.5 is very key HVN. If the buyers are going to hold it together, bigger picture, then that HVN really should not break. And, we should hold above that area. If that goes, then that could completely shift the control of sellers, even on the larger time frames. And, we could be looking at a break below the 60-60.5 balance, eventually. So that would definitely switch our bias from, short-term neutral to short-term bearish. So, very important for the buyers to hold the market up today. It's a key inflection point in the market. So, let's just watch and see if the buyers are able to hold it above 79.75 to 81.75, or, even if we get a poke below and head lower, if we can get back above it on the day time frame. As long as we can get back above pre-market support on the day time frame, there's still a shot that buyers, bigger picture, can maintain control. And then in TF, let's see if at least it holds the balance lows right at 87, 88. That's kind of the final spot in TF. So those are the main ideas. Let's just be cautious in the first 30 minutes since we have econ out, and then take it from there.